welcome to the VSA Capital Tech and Transitional Energy Podcast. It's Thursday, the 13th of November, and both Phil and I are up here in London. I'm back again from my little trip down to Cornwall, although I'm off to Dubai and the Dubai Air Show next week, and then on to India. I'll let listeners guess what I might be up to with both of them and which clients I'm talking about and travelling with. But I'm not sure I'll be able to do the podcast next week with you, Phil, because we'll be busy. How are you, Phil? All right?
Yeah, very, very good. Thank you, Andrew. And you'll be sadly missed next week, but David will be with me.
So, look, just sort of doing the usual sort of intro type thing. This week, it's not been a very good week for the Labour government. What a surprise. I think most people know my political views, but, you know, we've got unemployment was going up through the roof. GDP's going down through the floor this morning, below expectations at 0.1. I think everybody's realising that the budget's going to be a disaster. And then even more interesting than that is that Starmer is under attack and people want him to go. What a surprise. Actually, the bookies have him as odds on that he will go next year, which is very surprising. That's pretty unprecedented for someone who, you know, did have a very large majority. I mean, he didn't really have a majority because Conservatives lost it rather than Labour won it. Will he go next year? I don't know, but that's what the bookies think will happen. What do you think, Phil?
I would think it's a distinct possibility. I was quite surprised to see the scale of the unemployment figures as well. That's back to the 70s there, but it is up to 5% unemployed now.
I mean, the UK is in a right bloody mess. But, of course, we also have to remember that Europe is also in a right bloody mess. The world's in a pretty big bloody mess. And, of course, I don't know whether last week you were chatting with David about whether we're having an AI crash or not.
Yes.
This week, we're not having one this week. I think things are going all right this week. But clearly people are very nervous about, you know, some of the valuations on the AI stocks out there. But, you know, they are stocks that have got massive growth. And I was I was very pleasantly surprised, but also a little bit confused by something that happened yesterday, which was, I think people who have listened to this podcast for a long time know that I own SSE in my SIP because I view it as a good long-term sort of holding, and it used to be quite a high yielder. It's less so now because it's actually performed quite well. But I also always point out there's a trading stock. It goes up and down like I'm not sure I can say that, but a horse draws. I said it anyway. What the fuck? Oh, God, I shouldn't say that, should I? That was an F word. No, take that out. We can't edit it out too late. Anyway, it doesn't really matter. Moving on swiftly. SSE. So, it had got to the top of the trading range on Tuesday at £20. And actually a client who I have a lot of time for, I'm invested in his fund, at Premier Mighton, Jim Wright. He's got a sort of infrastructure fund, and it's a good fund actually, by the way, if anybody's looking at it, because he promises basically 9% per year growth. I've been in it now for probably 7 or 8 years, and he's actually over-delivered. And it's amazing how every year he comes in and performs. So if you're looking for a nice steady fund, I'd recommend that, Jim Wright at Premier Mighton. But anyway, he rings me up and goes, Andrew, SSE's hit the top of your trading range. And I go, yeah, but it's interims tomorrow, so it's a bit dangerous to sell. I'm not really a trader. And he goes, well, look, rumour is there's going to be a placing, fundraise. I'm like, oh, no, don't need a fundraise. That's going to send it all the way crashing back down again. And lo and behold, they did come out with their interims, and they did come out with a 2 billion fundraise. And I read it and thought, oh, no. And then I switched on my screen. It's not only gone from £20, it's gone to £23. Yeah. It's a little bit off that today, more like sort of £22.60. But I mean, I've never known a situation where you have a 2 billion fundraise and the stock goes shooting up. I mean, it put me in a very good mood. I don't know if you've got any more thoughts on it, but just before you do give your thoughts, funny how most people know that my son runs the Schroders Energy Transition Fund.
Yeah.
And so he does follow things like SSE because he tends to be in the big stocks. And he tells me that actually a few other utility companies have done exactly the same thing and the stock goes shooting up afterwards, partially because their investment plans are so exciting.
Yeah.
And also because lots of people short it in front of a potential placing and then get calls out and there's a short squeeze. What do you think, Phil?
I think there's a lot in the investment plans being very exciting. There's a lot of just internationally investment now going into grid infrastructure because of AI and because of the growth in renewables. And I think people are looking forward to where capital is going to be spent. And these guys are spending it. And particularly this is, up in Scotland to get electricity down to England from all the wind farms that are up there. But it's an international thing, and it's a different way to play the renewable energy space.
I mean, I think they're making, was it 33 billion of investment?
Yeah, that's it, over a 5-year period, in the networks,
That's a lot of investment. And nice to see that we're taking something off the Scots for a change and not them taking everything off us. Oh, that was a bit of a well, anyway, being careful what I say. Being very careful what I say.
I was more up in Scotland there. I'm careful on that one.
Anyway, so that's sort of, where we are in the world at the moment. Other than that, not an awful lot in tech and trends necessarily. So we'd better talk about numbers and things.
Yeah, well, there've been a few trading updates, though, Andrew. Where money is being spent at the moment, clearly in defence. BAE Systems had a trading update for their second half. I mean, their shares are up 56% year to date, but have been sort of flat around from July. But they announced that their order intake is £27 billion so far this year. That includes a £4 billion order for Typhoon aircraft for Turkey that was more recently announced, $3.3 billion in electronic systems. This is for space and mission systems, which has been a new area that BAE have gotten into in the last few years. But also $1.7 billion funding for combat vehicle production. So strong momentum from there. They are expecting sales growth of 8 to 10% this year, up from £28 billion in 2024. And they've also highlighted that Donald Trump's voiced support for the AUKUS program. And that's really important because BAE Systems, of course, are building all these submarines in the UK. So very important for high-value UK jobs. And we did start off this discussion on the unemployment numbers. Rolls-Royce also had a trading update.
Yeah, that was all right.
Yeah, this morning. I mean, their shares are up over 100% this year to £97 billion market cap now. Their trading update was to October 31st. Strong performance generally across the group. Obviously, they're in it's power generation and propulsion solutions for air, sea, and land, as they cite it. They've said reiterated full-year guidance. This is for underlying operating profits of 3.1 billion to 3.2 billion. But some interesting things within this trading update, actually, Andrew. Civil aerospace, which is a subject that you know very, very well, and off to the Dubai Air Show. They had large engine orders, and it's very interesting, as aircraft engine orders, who these were from. Indigo, which is an India budget airline, has ordered. They've ordered more engines with Rolls-Royce, but they've also been ordering another 30 Airbus A350 aircraft. They're looking to the long-haul markets. Malaysia Airlines have placed orders with Rolls-Royce, but also Avon, who apparently is a world top 3 aircraft lessor. They have over 1,100 aircraft in their fleet, including Airbus and Boeing. And they've been ordering engines as well from Rolls-Royce. Defence, they've said, remains obviously very robust for Rolls-Royce. But power systems, I mean, Rolls-Royce is just at the moment, you want exposure to civil aerospace, defence, AI. So the power systems, they do backup generators for data centres in particular. It's very strong demand for their power systems. And development's going ahead in small modular reactors for nuclear as well. So all good progress for Rolls-Royce.
I mean, there is still phenomenal growth in the airline industry, particularly in that sort of area of the Middle East and Southeast Asia. Dubai Airport, they're just opening a new airport. It's extraordinary. It'll have 5 runways. Will handle 260 million passengers. It will have 400 gates. I mean, get there early to make sure you can get to the right gate. I'm very excited to hear more about it when I'm actually out in Dubai. But also, Singapore Changi Airport is opening their new Terminal 5. In Malaysia, KL is expanding. They've got Penang, which is a big also cargo hub, really trying to expand. And you're going to be hearing more about this from me in the future. And you've heard a bit in the past as well. But of course, they all want to be greener and they all want to go autonomous airside. I'll leave it at that on this podcast, but we all know who the winner of that is. Anyway, moving on.
Moving on swiftly, sticking with defence, Avon Technologies.
Which is defence, and it's not rubber dinghies. It's amazing how it's transformed. I mean, just extraordinary. What a brilliant business transformation.
It is. The ticker's AVON. Market cap now is £564 million. The shares are up 35% year to date. Specialises in ballistics helmets, ballistics wear, general, and also, it's breathing equipment for nuclear, biological, chemical threats. So defence is a bigger area for their products. They've developed a new helmet. They own a company called Team Wendy in the US, but they're a specialist in ballistic helmets, and they've been winning new orders for the US military. They said that their revenues, this is their full year to September, revenues rose by 14% to $314 million. They said that operating profits are up by 27.5%. Interesting how that's dropped through, and they've upped their margins to operating profits of $40 million, and their final dividend is up by 5.6%. And those all-important order books are up by just under 17% to $263 million, progressing very, very well.
Yeah, good one.
Avon Technologies. Volex, who was a pick of the year, I think, a couple of years ago from me, Andrew, is going very, very well. Volex, the ticker is VLX, 775 million market cap now. What do? It's connectivity technologies, specialist cabling connectors. They go into electric vehicles, data centers, medicals, and consumer applications. 25 manufacturing facilities worldwide. First thing is Volex is that they've announced a board change. So Nat Rothschild, who was originally chair, he joined Volex in November 2015, is moving from being executive chair to chief executive officer. Now, he joined Volex in November 2015. I was looking back, the share price was 60p then. The share price now is 422 pence.
The boy's done well.
And he owns 25.5% of Volex.
The boy's done well.
He's done very, very well. So they're also bringing in a new chair, Mr. Webster, and he was formerly CEO of CPM Holdings. And he brings loads of experience in global manufacturing businesses across public, private sectors, and he's been in different sectors as well, involved in industrials, but involved heavily in automation. Previously, he was at ECI, electronics company, for 20 years, and he transformed that, grew the revenue significantly. So it's going to be very interesting to see the impact that he has on the business. Meanwhile, they reported their results, their interims. Revenues up by 12.7% to £583.9 million. Within it is organic growth of 13%, all important that we look at. EVs in particular saw strong growth of 13%. Consumer electricals was less, declined by 6%. Medical revenues declined, but in what they call complex industrial technology, organic growth of 48%. What was that from? Data centers. And it's their high-speed digital cabling for data centers. Profits, on that revenue growth for around 13%, profits grew by 43% to $37.9 million and reduced their net debt.
It's all good stuff.
It's all good stuff. Now, the one that is my pick of the year for this year, Luceco, again, is connectivity, electrical cabling, going to EV chargers, LED lighting markets. The shares are up by 11% year to date. So it's making progress. Not as much as some others, but it's making progress nonetheless. They reported Q3 revenues up by 19.5%, and they've said that they're now expecting their adjusted operating profits towards the upper end of market expectations. And the market expectations are for a range of £30.5 million to £32.5 million. So that is Luceco. The market cap is £229 million. And they're trading, just looking at valuations on some of these actually, they're trading on 1x sales and a P of 11 times falling to 10 with a 3.6 dividend yield. But they do have debt of £63 million in there in the mix there as well. Volex, just in terms of valuations, EV net revenue of 0.95 times, just under 1 times, and an EV bit of 10.2, falling to 9.4 times. On their valuation, Rolls-Royce is now on just under 5 times EV revenue, an EV bit of 29.4, falling to 26.3 times.
Being big gives you a better rating at the moment.
It does.
So the big boys should go around sorting up the little boys. Well, the medium-sized boys. And the medium-sized boys should go around sorting up the little-sized boys. But there you go. We'll see if it happens or not.
We do advise on mergers and acquisitions, by the way. Okay. Right. Another company.
That was a quick advert. Sponsored by VSA Capital.
That's absolutely right. AB Dynamics, ABDB, I think is the ticker for this. The shares are down by 34% year to date. It's one that we've discussed on the podcast before. They manufacture. This is advanced testing systems for the automotive industry. So all these new vehicles being developed, autonomous, fully autonomous, semi-autonomous, they all need to be tested to ensure that they meet safety standards, but also that the vehicles do work as is on the specifications. So they have simulators that manufacturers and motorsports teams use to simulate driving conditions and to different conditions for the car. And they also have actual systems where they can test the cars as well. So particularly things like advanced driver assist systems. So they reported their full year to August, and bear in mind the shares have been down. And I have to say, general sentiment towards automotive, we discussed much on the podcast, has not been great this year, but there've been some pretty specific areas of growth, including off-road, but EV generally. But it's been quite a mixed picture. Nonetheless, ADB has seen the revenue improve 3% to just under £115 million. More interesting to me looking at this was their gross margins are up. Now, bearing in mind that for a company like this that has, particularly components, people costs, but their gross margins are up to 62% from just under 60%, and profits up by 15% to £20.3 million. They have net cash of £41.4 million, up from £28.6 million. So optionality there for them to further invest in the business and to acquire. So they're in line with current expectations. But what's also quite interesting about this one at the moment is that in July they announced that Dr. James Ralph, the CEO, is to stand down, and that Sarah Matthews de Mers is coming in as new CEO, and she's currently the CFO. So let's see what changes come ahead for AB Dynamics.
Yeah, I mean, I have to say, in general rule, I'm not a great fan of finance directors becoming the CEOs. I'm not sure it always works, but I mean, that's a personal view. And it varies a little bit from sector to sector, but and it's not true for every company. So I'll just shut up. Actually, I'll tell you what it is. I mean, I know you've got a few more results to go. Yeah. But what's interesting is, we have a lot of really good companies in this country. I mean, they're all flying into the most horrendous storms and thunder and dark grey clouds and you name it, thanks to the state of the economy. But, they get through. We've got some bloody good companies in this country. Anyway, moving on. Who else you got?
Yeah, they've got great tech. They're selling internationally. Dialight.
Yeah.
DIA. It's 116 million market cap. Maybe this should have been my pick of the year. Shares are up by 160%. Now, Andrew and I always talk all about the management. Good management takes a semi-decent business. Steve Blair. I remember Steve because he was the CEO of E2V Technologies. Really complex technology company. Imaging systems, electronics warfare, always a tricky one to explain to investors. Super British. It's EEV originally. Steve Blair. And it got acquired by Teledyne Technologies. So Steve is now CEO of Dialight. And he's been involved in quite a turnaround for this business. So Dialight it's all about LED lighting for industrial applications. So this is everything from big warehouses, oil rigs, chemical plants, but they also do traffic, things like traffic signaling as well. The business, as I say, it has been struggling. It's been going through restructuring under Steve. They've reported, this is year end. I'm just trying to think. I think this was a trading update. Let's just
get it was trading update.
Yeah. Oh no, here we are. Yeah, so it's interims actually. Yeah, my mistake. So
a lot of trading updates this week.
Yeah, there's been a lot for us to track actually.
Yeah.
So this is for the 6 months to September 05. The revenue was $86.4 million, which was down by 4.3%. 9.4% down in the lighting segment. And they reported challenging market conditions, but we'll get onto that. But this was offset by 10.2% in their signals and components division. Let's just discuss that. Signals and components, they had a strategic review on the optoelectronics product line. They have in that line, it's higher margin sales. So they're restructuring the sales team in that. I think they're reducing the number of product lines. They're focusing on reducing lead times to customers, and they're seeing growth, particularly from data warehouses. Yes, data centers.
There we go. Data again.
Specialist lighting in those segments. So that's progressing very well. In the other lighting segment that they're in, they're seeing increased sales. I think so. This is Nigeria and Angola for oil and gas. I mean, it's a classic UK tech company, but internationally exposed. Again, they restructured the sales team. They're focusing on higher margin products, and they're reducing lines. They also reported in these results that the underlying group overhead has been reduced from $25 million. It's $25 million reduced by £3.9 million. So you can see a lot of restructuring going into the business, and that's now starting to feed into the profitability of it as well. So a real turnaround story there. Trading on 1 times EV revenue on an EV EBIT of 21.1, falling to 15.9 times. Why is that? EBIT rising of £7 million to £9 million, according to analyst forecasts on Icon. So that is Dialight. DIA.
Well done, Steve. All right, moving quickly on because time is clocking along.
It's clocking on.
Keep going, Phil.
Shall I just do? I'll do one last one. Right, Oxford, and this is a complicated company. Oxford Instruments, very long quoted. OXIG is a ticker, 1.2 billion market cap. They have their interims. Their shares are down 3% year to date. This is very internationally exposed. It's all about complex instrumentation for science. From imaging systems, electron microscopy systems, and they're exposed to scientific discovery, right? So it's healthcare, life sciences, semiconductor industry, materials analysis in R&D laboratories. Anyway, so they reported their interims. Their orders were just up by 1.4%, but their revenue was down by nearly 8% to £185 million, and that really did hit the operating profits down by 23% to £25 million. Impacted by academic funding in the US, well, of course, we're not helped by the government shutdown, and we've seen cuts in health funding as well, hitting technology companies there. Tariffs took their impact as well. But nonetheless, the semiconductor side of the business seems to be doing very, very well. They went on to say that in their advanced technologies business, which is involved in producing equipment for plasma etch and deposition systems in semiconductors. This is to form the layers on a silicon chip, basically. But the sort of silicon chips that these are going to are used in data centers. So
They
have seen in the advanced technologies division, this is their second division, their orders were up by 25.3% to just under £60 million. And they saw growth in the profits of that division. So, on balance, starting to make progress again, I think, Oxford Instruments.
Very good. That'll do for this week. I think that's quite a lot of companies. As I say, I'm off to the Dubai Air Show and then off to Hyderabad, which is sometimes known as Cyberdad, because it's the fourth largest city in India, about a population of about 26 million people. But it is a center for a lot of technology, particularly transitional energy. So it's going to be fascinating, actually, to see what is really going on out there. But I'll report back on that when I get back. I hope everyone has enjoyed this edition. As always, if people have got comments, want to email us to say how brilliant we are, don't email us if you don't think that. Or if they want to sponsor us, send us a check. We'll take anything, even if it's a pint of beer down the local pub. Or just to say hello. We're always interested. Funny enough, on our other podcast, the 5 Minute Morning Miner, which is a mining podcast which we do daily, recently I've been getting an awful lot of interaction with the listeners, which has been great, actually. And of course, then they ask us to talk about things or look at things, and we do. So again, if you want us to look at a particular company, do say, can you have a look at this company? And we'll tell you what we think. But on that note, it's goodbye from me.
And goodbye from me, and chat when you're back, Andrew.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.